Hey guys, how's it going? It's Andy from Magooinvesting. Happy Wednesday. As I mentioned in my last video, I'm going to be going a little light on the uploads for maybe the next week and a half. I'm finishing up grad school, I'm packing, I'm going to be moving on Friday, and I've got to reestablish my entire life once I get up to Portland. So I'm going to have a lot to do, so maybe the videos are going to be on the light side for the next week or so. But in today's video, I wanted to take a break from all the stuff I needed to do and talk about the stock market. In today's video, I wanted to talk about what was one of the most heavily anticipated IPOs of 2019 and was talked about a lot, especially on YouTube in late 2019, early 2020. And then as the pandemic hit, I haven't really heard as much talk about it recently. And so in today's video, we're going to be talking about Uber and kind of Lyft because they're in a similar boat at this point. But I'm going to be talking about the news that has been pushing the stock around since its IPO in May of 2019. We're going to be talking about some of the problems going forward. We're going to hop on the charts and see if I see any technical reasons to take a position. And then I'm going to wrap up the video giving my overall opinion on Uber stock and discuss if I see any reason why I would be taking a position in Uber anytime soon. Before getting started, I do have to say that I'm not a licensed financial advisor, and this is not financial advice. Anything you hear in this video is just me giving my own opinions on the stock market, and you need to do your own research. Also, if you've been enjoying these videos, I really appreciate it if you hit that like and subscribe button, as it would help my channel out a lot. With that out of the way, let's get started and talk about Uber, ticker symbol UBER. So far in 2020, Uber is up around 3.5%, and it's currently trading for $31. However, when you put it into perspective where the stock IPO'd and kind of the one-year trend, it doesn't look that fantastic. And so here's the year-to-date chart. You can see that the stock was at $40 before the pandemic, crashed in March down to $15, and it's recovered to around $31 at this point. And the stock hit recent highs of around $37 back in June, and has kind of been sliding since that point. It hasn't been catastrophic, nothing like what we saw during the beginning of the pandemic, but it hit 37 and it's just kind of been sliding down to the low 30s. Looking at the all-time chart, you can see that it's pretty recent. It only gives you a little bit more than the year-to-date chart. That's because the stock IPO'd in May of 2019, and there was a lot of hype behind it. So the stock IPO'd for around $45, and just on the first day that it IPO'd, it was down 7% the second it went public. When the stock IPO'd, the company was hoping for a valuation of around $120 billion. However, as a result of the fall on the first day, the valuation of the company dropped to $75 billion just in the first day, so it was not the ideal IPO experience. I always like looking at these older news stories for stocks because it's really interesting to see what the kind of the talk of the stock market was at that point. As of right now, we're talking about a lot of the pandemic stuff, but going back to May of 2019, we were back to the China trade talk. And that seems like such a long time ago because 2020 feels like it's dragged on forever. But trade talks are coming back, and it's interesting to see that that was kind of on the mind of the stock market back in May of 2019. So Uber was a very popular stock to talk about in the middle to end of 2019. This was because it was one of the most highly anticipated IPOs, as it was pretty much a race between Uber and Lyft to IPO first on the stock market. And one of the most vocal members of the investing community on YouTube is Jeremy from Financial Education. And he has been very bullish on Uber since the very beginning. And I will give him credit, he 100% got Tesla right, and I'm sure he's made a lot of money from that. But Uber has been one of those stocks that he's been bullish on, and I just do not see the appeal as much. And we're going to talk about some of the reasons why the stock has fallen since its IPO. So towards the end of 2019, there was a lot of hype behind Uber, and there was a lot of discussion on, is now the time to buy Uber? And I've talked in videos before how I do not like buying into IPO stocks. And one of the reasons why I do not like buying IPOs pretty early on is the fact of the share lockup date. This is people that are inside the company and early investors that are given shares as kind of a thank you because now they are part of a publicly traded company and it's one of their big rewards. And for a lot of people, this is life-altering money. And after 180 days, you are allowed to sell your shares. This kind of prevents a massive sell-off the second the stock goes public because people just came into a lot of wealth, and maybe you don't feel as confident in your stock when you could put all of that money into something like an Apple. So it's to prevent the stock from selling off immediately after IPOing. And so getting into November, December, this is when the share lockup date was set to expire. And it's actually when the stock hit recent lows of I think it was around $27. So that was the news at the end of 2019. 2020, as you can expect, has not been very good for the company overall. During April, the company said that year-over-year ridership fell around 75% overall because of the pandemic. This makes a lot of sense. People are not going to work as much, people aren't going out, and this put a huge toll on the company and Lyft in general. However, Uber Eats has been a vital part of the business model of Uber going forward and has really kind of saved them during the pandemic. Before this, Uber Eats was between 6 and 10% of the overall revenue for Uber. However, in quarter two, the ridership from just the normal Uber was $3 billion, and the revenue coming from Uber Eats was $7. So that is a huge increase. And while it's not going to be like this normally, This was a lot of revenue that came from an area that was not super utilized by the company and really saved them going forward. And you can see this when you compare the stock price of something like Uber compared to Lyft. Uber is up so far on the year, being up around 3.5%, and Lyft is not doing so great. At this point, Lyft is trading for around $29 and it's down 33% year to date. So you can see the discrepancy between the two, and a lot of discussion between the reasoning behind that comes from the diversity of revenue sources from Uber that Lyft doesn't exactly have. Also, Uber is very heavily invested into the delivery because they had an all-stock acquisition of Postmates for $2.65 billion back in July. So they are heavily invested into delivery. However, that has not been the greatest for them overall. Even though the revenue looked really good, the margins for these transactions are not as great. Considering you're going to have to be paying the restaurants, the drivers, they're not making as much money off of each of those deliveries. And as a result, we saw some massive losses coming from deliveries. And so while deliveries had revenue of $7 billion, they ended up having a net loss of $232 million. And then the ride sharing, which brought in $3 billion in revenue, had a net profit of $50 million. So you can see the discrepancy. Even though the delivery aspect brought in significantly more revenue, they had a huge net loss as a result of that because of the lower than average margins. And so now we need to talk about the main reason why I really do not like Uber stock. I actually made a video back in early January talking about why I never think I'm going to be buying Uber stock until something happens. And that one thing that I'm watching actually has a deadline at this point. I was kind of surprised. One of the main reasons why I do not like Uber at this point comes from the problems that they've been having against the state of California. Basically, the argument is whether or not the delivery drivers or the Uber drivers are contractors or they're employees of the company. And so going into the pandemic, we had a lot of fights between the state of California, which I think it's really interesting that it's mainly just California, and Uber and Lyft. And there's been a lot of funding put in on both sides to try to get a result to this. But we do have a set in stone deadline. AB 5 was put through in September of 2019, which was supposed to classify delivery drivers and just drivers in general as being employees and not independent contractors. And so there's been a lot of fight between that, but now we are getting something that's going onto the ballot in this upcoming November that's really going to decide what happens going forward with Uber and Lyft. And so after more than a year of fighting, it's all coming down to Proposition 22, which, as I mentioned, will be on the California ballot in November. And as a voter from California, I will be voting on this measure, and I don't really know which way I'm going to go at this point. I still need to do a lot more research to kind of figure out what's best for everyone. But for a shareholder, this really scares me. Some of the numbers that I saw is that if drivers are classified as employees, it's going to raise overall costs for Uber and Lyft by 30 to 35%. And for two companies that have just been draining money going through the pandemic, there's going to be a huge hit to these companies. And so when I like buying into beaten down stocks, I like it to be the fault of the company, as weird as that sounds. Because if you believe in the leadership and maybe the track record of the company can recover. But in this aspect, you can love the business model, you can love the executives running the company, but you're going up against the state of California. And if things don't go well, it's kind of out of your hands. And that's kind of the biggest thing that's holding me back from taking a position. But let's head on over to the computer and I'll show you what I see there. And then I'll kind of give my final wrap up on Uber stock and kind of Lyft overall. All right, so here we are looking at Uber stock. This is the all-time chart because the stock has only been public since, May of 2019. So you don't have as much of a track record compared to some of these companies that have been around for decades plus. But this is all the information we have. And this was my best attempt at drawing important support and resistance lines. And one of the first things that kind of pops out to me is these are not the most set in stone support and resistance. When I look for well-defined areas of support and resistance, I'm looking for areas that get rejected during earnings reports. These are the catalysts that often push through these zones. And if it's unable to push through that, I usually think of that as being a solid resistance. The only time that I really see that in recent memory is over here, where it pushed up above right after the earnings and then gapped down significantly. So what this means is the day before it opened at 33.30, it closed at 34.70, and then the next day it opened at 33.10. So it either aftermarket on the day before or pre-market the day before, it fell down significantly. So when I'm looking for areas to enter, I would much rather see that type of price movement on the bottom side for support than close to the resistance, because ideally what you want is you buy near the support, which is something that was just tested, and then you want to be able to push through that resistance. And since we have not seen that level of steady support on the bottom side, but we have seen that resistance on the top, makes me think that the upside potential of this position is not super high. When I draw this out from support to resistance, it is 15%, but One of the problems I see is if it drops below the support that I've charted, there's not really a great area where there's a very set in stone support. It could come down to here, maybe to the 22, but you just really don't know. And for a company that's in a tough spot and has this looming election day coming up, if it falls, I don't know how low it's going to go, and I don't see as great of an upside potential. When I compare that to something like a Southwest, this is what I'm looking for a company that's kind of beaten down. So it was very easy to chart out these support and resistance areas. They've come down, it's tested this 1, 2, 3, 4, 5, 6, 7, 8 times from the bottom side. So I felt very confident when it came down and tested right here. And we have plenty of examples of it trying to push through this area from earnings and was unable to do so. So this was a very easy trade for me to see. When I go back to Uber, I just don't see as set in stone of a position to take where I would happily buy into the stock that's in a tough spot right now. So as of right now, the charts are not pushing me in the direction of taking a position on Uber. So overall, I do like Uber as a company and decently as a stock. But at this point, I don't feel comfortable investing because you have this huge roadblock that's going to be coming towards November. And so if that makes it through and things go all right for the company, I will heavily consider investing in this company because I think that was one of the major roadblocks going forward to long-term prosperity of this company. But at this point, I don't think it makes sense for me to invest in a overextended stock market in a company that has this huge roadblock against the state of California coming up. But we're going to have to wait and see what happens. If I was going to be trying to profit off of this move, I would probably be buying calls for maybe the December strike, but I haven't really looked that far into it. But right now, Uber is a great company. They're in a really tough spot. They kind of got saved by their delivery aspect, but it seems to not be a long-term solution. So it'll be very interesting what happens with Uber and Lyft going forward. And let me know what you think about these two stocks in the comment section down below. Thanks for watching this video. I appreciate all the support. I don't know exactly when I'm going to make my next video, but I will see you then.